We are back with Jamie Golombek, Managing Director, Tax and Estate Planning at CIBC Private Wealth Management. Jamie, we mentioned this change to the alternative minimum tax as part of the federal budget. Can you explain what that is and the changes that were made?
Sure. So we've had an alternative minimum tax system for a number of years right now. And basically, this is a parallel system that runs parallel to the normal tax system, in which an individual, typically a high-income individual, recalculates all of their income and tax using the alternative method. Now, the government has felt that the AMT, as it's known, was not properly capturing enough tax from high-income individuals that were taking advantage of various preference items, various deductions, and various credits. So starting next year in 2024, the government has announced sweeping changes to the AMT system, broadening the base of the AMT and bumping up the rate of the AMT as well, such that it will now capture more people who would now be subject to paying at least a minimum amount of tax on an annual basis.
Can we characterize everyone who this may end up impacting as high-income earners?
Yeah, I would think for the most part, unless your income is over, let's say, $300,000 a year, you're probably not going to be affected. So the government budget document specifically said that 99% of the estimated billions of dollars of new revenue that this will bring in over the next 5 years will be brought in by the people earning over $300,000, with 80% of it really earned by the people over $1 million. So it's really the high-income Canadians. And again, it's not just salaried employees. They're looking for individuals that are earning Canadian dividend income, capital gains, and are taking a variety of various tax deductions, including loss carry-forwards and things like that.
I guess one question is, aren't people allowed to exercise those tools? We actually, ask you about these different ways by which you can generate income on BNN Bloomberg all the time, and certainly a lot of people are trying to further themselves in terms of their financial position. What might this send in terms of a message about using those kinds of tools?
Well, again, I mean, all these tools are normally stuff we talk about regularly in terms of, obviously contributing to RSPs. That's not going to be affected. But, when you're earning tax-preferred income like Canadian dividend income with the dividend tax credit and capital gains at a 50% inclusion rate, that will now be a consideration. And therefore, the government is now asking for, if you're in the high income, to pay at least a minimum amount of tax every year. The good news, however, is that in almost every case, the minimum tax is really just a prepayment. It is recoverable. There's a 7-year carry forward to the extent that your ordinary tax exceeds minimum tax in a future year. So again, this is where we would do some planning. We would sit down with an individual, we look at their current situation, and then project over the next 6 or 7 years to make sure that we can recover minimum tax paid in a prior year before it expires.
And we referenced, it sounds like the government anticipates generating something like $3 billion in additional tax revenue from this. Is that right? Because I know the headline we talked about yesterday is the government had committed to about $43 billion in its own additional spending as part of this budget.
Well, that's right. So the $3 billion figure is an estimate over 5 years, starting in 2024, of additional tax revenue. I guess the question I would pose to the government is this real revenue, or is this just a timing difference? Because if most people end up recovering their minimum tax over a 7-year period, are we just pushing the problem out 7 years, or is this a real permanent savings or tax revenue grab for the government?
All right.